Okay, hello everyone. So I've actually already recorded a video, pre-recorded a video for the VIP members, with a little bit more detail than this video will be. So essentially, I'm Gray. I'm one of the basic people who be doing videos in the Apex Trades VIP Discord. The stuff I'll be covering is more based around TPO, Order Flow, other software related to that. As a VIP member, you get access to all of my templates as well. Not just that, you also get access to 2 short courses that are basically cherry picked from a bigger course, which is on my own Discord, and you'll essentially be able to watch those 2 short courses as a VIP member. Those short courses as well have a ton of information, and it almost feels like I'm giving it away. I know everyone would probably say that, but generally speaking, it really does feel like that way in terms of the information and quality of the sessions. So all the sessions I'll be producing will be done live, where you'll have to attend the sessions. If you miss the session, there'll be chances to re-watch them. As time goes on, I'll definitely be doing repeats of certain weeks, and things like that. Okay, so in the Apex Trades Discord, there's 4 of us. Each of us are going to be doing something slightly different. We all have our own way of approaching things, and we actually think that's actually one of our main, if you will, selling points, is that not only will you, instead of buying one person's course or subscribing to one person's membership, you're actually subscribing to 4 people at a very, very affordable price, especially if you're looking at the VIP 1 or 2. Those are, if you work it out, if you break it into a daily price, it's probably less than $1 a day. It is less than $1 a day, definitely. Maybe even less than half $1 a day if you're on the VIP 1. Okay, so quick comparison between VIP 1 and 2 is in regards to what I will be putting out in VIP 1. You'll get all my templates. You'll also get my written educational stuff that I will write for you. You'll also have access to, obviously, the VIP chat, and there's stuff from the other guys as well. However, VIP 2 is probably where you'll probably see me a lot more, and that's because the courses that I'll be running are all VIP 2. They're all VIP 2 for VIP 2 members. Okay, so if you like what you see today and you want to learn a little bit more, please head over to the VIP 2 to actually access the courses. All right. So, what better way to give you an introduction to me than to just break down my recent thoughts on Bitcoin and where I think Bitcoin is heading. Okay. So if we just head over to my macro charts. So one of the things I will teach you in the VIP section is profiling. The 2 types of profile we use are volume profiles and essentially time-based profiles. I might go into how I combine time and delta, but that might be later on in the as Apex Trades develops. I might go into that a little bit more. Okay, so generally my trading style is based on volume and time. I do look at price action a little bit. I respect it. However, predominantly I like to trade based on volume and time. Okay. In terms of tools I like to use is obviously your regular volume bars at the bottom, and volume profiles, like I said before, time-based profiles, VWAPs, things like that. Okay. As part of the Apex Trades Discord, I think those are going to be the core things I focus on when I run my sessions, okay, using those tools properly. So one of the things we do as people use profiles is generally we don't just look at market structure as a like you'll find most price action traders will look at market structure like this, and they'll draw some schematic and maybe they do some Elliott wave thing. You know, generally it looks something like this, right? Where you have these higher highs and higher lows, zigzaggy thing. And why that does happen to some extent on like a lower time frame, for traders who trade how I trade, we generally don't look at it that way, especially for traders who using order flow, volume. We're relying less on that price action information. Give me 1 second, I adjust my mouse. Instead, we tend to look at market structure as a series of expansions and a series of consolidations generally. So what that might look like is, for example, we don't generally believe that markets are this kind of clean. We instead believe that markets kind of move like this, where you'd have an impulsive leg up, basically go sideways, do a little bit of the crabby before another leg up, and then do another sort of leg up. We see markets moving from impulses to areas where it cools off to another essentially impulsive move to an area where it cools off. Okay, and there's reasons why we assume this happens, and we have our own essentially model to suggest why this kind of happens, and everything else is essentially built around those premises. Okay. Okay, so to make it seem to clear that up a little bit, and again to just go over it one more time, we generally don't see markets moving like this. We instead see markets moving from what we would call price imbalance to balance. Okay, so price imbalanced, okay, and then when price is balanced. Okay, so we see the market as essentially just within two environments. Okay, and when you're imbalanced, we would call that trend. Okay, and if you think of the words I'm using here, right, if you think of the words I'm using, right, so imbalanced, what does that mean? Well, in a market where you have buyers and sellers, to put it very simply, an imbalance would essentially be where one side is a lot more dominant on the other. So an imbalance would be maybe that impulsive leg up. We have way more buying than selling. Then that would continue until sellers essentially match buyers. Okay, so that huge amount of buyers buying, maybe it cools off, maybe sellers get really excited. Who cares? The main thing I want you to think about here is all that buying gets dampened, it gets balanced out by sellers. Sellers find equilibrium with the buyers, right? So maybe you have 75% buyers here and 25% sellers. Let's just say, I know it's not as simple as that, but for simplicity's sake, just go with me here. When price essentially begins to consolidate, that 75-25 split becomes more 50-50, where you kind of have a little bit of buyers and sellers, okay, a little bit of both on even side, and that would build essentially that consolidation, and that would continue until you have another state of imbalance again, okay, like that. And what we find generally is that these areas where there was balance, when price returns to them, similar behavior occurs. Okay, so when we're down here, we would again find that state of balance. Okay, something like that. Okay, so let's just delete all this. So one of the ways we look for where balance might occur is by using essentially these volume profiles, which is what I've got built out here. I generally don't use the volume profiles as much. I prefer the time-based profiles. However, I think generally I use both, quite evenly anyway. So on TradingView, I know they've just brought out TPO. I haven't really experimented much with it, so at the moment I still have my volume profiles just set up. Okay, and here's the areas where I'd expect us to potentially form we either accept into those balances or we reject off of them. Okay, so as you can see on my chart here, there's you can kind of see the interactions, and the areas where I've drew my volume profiles aren't random either. I don't just grab a range and draw a volume profile for the range. I actually have a very specific way of drawing my volume profiles. Okay. So anyway, thoughts on Bitcoin at the moment are, I think we go higher, to be honest with you. If you look at just recent price action here, right? So generally speaking, every time we've had like a really huge impulsive move like this, we've kind of always had another hit upwards. So for example here, that would be one, here as well, there's a number of scenarios where I can see and say that it's probably likely we'd have another hit up to the highs. Okay, off the back of such a momentous move. So in terms of what I'm looking for here, and I'm going to go into the lower time frames in a moment, but in terms of what I'm looking for here is I'm looking for us to essentially come into contact with this 37.5 38k level here, which is essentially the composite value area low of this previous area of balance, right, or value, however you like to call it, potentially even up to the 39k composite volume point of control here as well. Okay, ultimately the trend is still up, so I'm generally quite bullish. I think we should essentially lean as much as we can into momentum here rather than trying to open shorts that I think will probably just end up getting continuously stopped out. So what I think will happen is we'll have another hit up here. I think we'll start to round out. So essentially, if you look at sort of these higher time frames, very rarely do we just come up and straight back down. We generally go through a nice period of rounding out. So I think we'll start to round out here. There's a few things I'm looking for in terms of flow, which I'm not going to tell you all about just yet. And I'm looking for essentially I'm looking for tests of these levels and then the reaction in terms of the order flow and how we react off those levels after contacting them. Okay. So maybe something like that, and then we maybe start to round off on the other side. Generally, I'm going to be looking to play continuation of this on this trend. I'd like to buy anywhere here, to be honest, anywhere around this high volume nodule here. I think this would be a good area to buy. Likewise, quite a build up of volume here too. So anywhere around here is, I think, a really good area to buy for continuation. Okay. Looking at VWAPs, If we look at the VWAPs here, the yearly VWAP still showing us that trend is still going in that direction. Here again, that area that I was just pointing out before kind of coincides with the standard deviation high of the yearly VWAP. That will probably curl up a little bit more as we move higher. Likewise, the yearly VWAP will be moving up there as well. Same exists for the quarterly VWAP. So I'm looking here, but I'm also watching where my mouse is on this chart. So the quarterly VWAP will probably also start to curl up again to that level that I was just mentioning before. So here's kind of the real level I'm looking at for sort of going heavy on some spot buying for Bitcoin. Okay, and that's sort of my view on the macro. Let's now go to maybe a short time frame and have a look. So we'll just go, whoops, I gotta be careful, I'm clicking the wrong screen. So I have multiple monitors, and because I'm recording and this is all new to me, I'm just kind of watching myself and I just clicked the wrong screen. Okay, so move down the time frame by 1. Okay, so in front of you I have weekly TPOs. Again, I'm not so much I'm not convinced on weekly TPO on the TradingView TPOs just yet. I'm still kind of having a look at them. Good addition so far. I also notice I don't really use the reason my candles are like that is because I can see the profiles better. I generally don't use, like I said before, I generally don't use I don't really look at the price action so much. I generally don't look at candlesticks at all. Excuse me. If you look at this chart, for example, they are very much just in a background thing to me. But anyway, looking at Bitcoin here, we're sort of just curling up slowly. One of the things that's nice to see about the TPOs is this TPO here, this distribution here is kind of sat just above last week's point of control. So essentially what that would show us is one side is probably definitely a lot better positioned than the other side. The structuring here isn't great, to be honest. We'd want to see, in terms of that distribution, we kind of want to see something like this. If you kind of just look at this distribution here, this probably isn't the best distribution, honestly, but here's where, like I said before, that positioning kind of matters, because although the structure of it isn't great, it's kind of being held up quite well by that POC. Ideally, what I'd like to see is maybe just a test of these lows for us to maybe put in a little bit of better structure down here before continuing up and then tagging that 37.5, I think it is, or 38, maybe potentially 39, building that balance up there. Okay, essentially what I want to see is building that balance up there. Then when the flow changes, that's when I think it'll be time to execute some positions. In terms of positioning long here, I think anywhere here is probably your best bet. Likewise, here would probably also be not a bad shout structurally to buy essentially the bottom of this wick here. But really, I think the best place to buy would be, or to get into long, sorry, for that move back up would be here. Remember, like I said earlier, we kind of see prices moving through essentially range expansion, okay, or contraction, sorry. So expansion, then contraction, then expansion, then contraction. Generally, well, not generally, I mean, it's common sense really, actually. if I want to position myself long, I want to get as low as possible into this range, right? I want to position myself as low as possible. That way, you know, if I'm buying here, expecting the break of here, and we don't break it, I'm still positioned quite well. The same exists for not just the bottom of the range, but it's deviations outside of it. So, for example, if we're let's draw a better schematic, because as you can see, drawing is not one of my strong suits. So if we're sort of in a range like this, I kind of want to buy any time we kind of drop out that range for that reclaim, and I'd buy a little bit here, but I'd buy most of it on that reclaim. And I actually, in my other Discord, I haven't done it for a while, but I kind of put out the weekly updates, and we did it. I mean, it was a while back here, but essentially the same kind of move. No, not here. I don't actually remember where it was. It was such a long time ago, but it was identical to what I'm looking for here. It probably was here actually, somewhere here, where we just caught the tail end of a rocket. Okay, and you shouldn't be afraid to do that. Don't be afraid if you're, again, like I said, if you're still lower into this range, don't be afraid to or lower at the lows of the range or outside the range, you shouldn't be afraid to catch the tail end of a rocket. Okay, if you just miss your entry, don't be afraid to do that. Go with the momentum, guys. Yeah. So ideally here is where I'd like to buy. That might be a bit far away, so that's why the second best place for me would probably be this low here, just right here. Okay, I think this would be quite a textbook long. Okay. Likewise for the other direction, give me 1 sec, or the other scenario, should I say. Sorry, I'm just not very good at, I don't use TradingView that often, so I'm still trying to learn. I was looking for a rubber tool for ages, but I just realized you have to just click and delete, don't you? Okay. So likewise, the other scenario is I guess that we get, I do think it's kind of inevitable we come up here, to be honest. I'll be honest with you. The other scenario from here will be if we, and again I'm gonna have to delete everything. Will it delete my drawing as well? I don't want it to delete that. Hold on, is there a way I can? I might have to might have to get some lessons off. Oops. There's a TradingView nerds to help me here, because again, and I'll show you the software I use generally, but I'm not really looking at TradingView. The other scenario would be, I guess, we break through here, and we find acceptance. So when I draw this, it basically means building out balance within that composite, of which then we're looking to play continuation again. We're looking to rather instead of dampen our positions long, we kind of want to, I think we would look for continuation, and at that point I think we're going to 42 potentially. Okay, so a few things to look at, a few levels to look at in terms of my opinion. I'm going to show you some other tools that I use. I am just not getting this, am I? I think I'm copying and pasting or something. Kind of want to clear all this up. Okay. Yeah, and on a shorter time frame here, I'm just going to show you the tools I use. So I'm using, well, I say using, I'm generally, again, I'm not using TradingView, but if I was, I would be my setup would look something like this. You can take this template, it'll be in a Discord, and keep forgetting to actually put it in, but I will put it in after this video, where you can have access to essentially the indicators I use. I put in also the VWAP stuff as well, so you can kind of see, so you can play around with both templates that I use. So in TPOs, they're just daily TPOs with a volume profile. Like I said, I use both. I think both are necessary, especially for how I use them. I use both anyway. The candlesticks are very much in the background. I just don't really look at them, to be honest. On the candlesticks though, you'll notice that some candles are colored. That's because I have an indicator called qualified volume extension. So basically, if we have if the volume is relatively 3 standard deviations higher than the previous set of however many candles, it will color a candle for me, so I'll know, oh, okay, there's a lot of volume in this candle, for example. And with that, I have the market order bubbles, which would basically just tell me when one side is getting particularly aggressive, and that could be used in many different ways. Obviously, the most common way I'd assume it'd be used is people would say, oh, people, buyers are getting aggressive here, I'm gonna buy with them. And then the other argument to that would be, oh, buyers are buying a lot here, but this is not a good place to buy, so I'm gonna let them fill my shorts, sort of thing. So there's definitely a time to go with the aggression. Like here, this would be a good example of high volume candle, price is clearly moving up, and you got aggression coming, and a time where you probably go with the aggression. And then likewise, there's definitely times where you would look to see that sellers are getting aggressive here, but price is rounding out. Maybe I'm going to go against the sellers here. Okay, so essentially that's kind of what I use on TradingView. I basically use VWAP. I use this chart a lot more, to be honest, than I use the other one. And I just like to scan what different coins are doing. So I have a look at, where the altcoins are, and I can essentially assess their strength just by sort of flicking through them on this chart. These coins, you'll notice, will change almost every week, because these are just coins that I traded recently. You'll see notice a lot of fucking shit coins. That's because shit coins have been quite good, to be honest. And as you can see, I kind of just use these VWAPs on different time frames to essentially build out my to help me establish where trend is. And again, it sounds strange, but I'm not really looking at the candles here. I'm just looking at the direction of the VWAP. Okay, so if I'm not using TradingView, then what am I using? I'm using this platform, ExoCharts. I know there's other ones, so there's obviously there's there's going to be other platforms, right? Sierra, whatever, right? I like ExoCharts. I've always liked ExoCharts. I have used the other ones before. I know ATAS is free, or ATAS. I don't know how people say it. I just call it ATAS, to be honest. I think I watched a YouTube video ages ago, and that's how they called it. I also have a template on there, but to be honest, I don't use it because I feel like when I open ATAS, my computer goes into Windows 95 Don't really like that. Whereas XO feels good, looks good. To be honest, it's quite easy to learn how to use. Really, it's a really simple platform, and I quite like that because I don't have to spend hours building a template for every single altcoin I want to trade. It might take me still about 20-30 minutes, but yeah, a lot easier. Okay, so you'll notice it's very similar to my TradingView setup. Again, this is the platform I use to trade generally. I'm using XOchart. It's the one I check all the time. So the way my monitors are set up, this is the one that's in the middle. Obviously I use other platforms for other things too, but the TradingView and XOcharts are the ones I'm going to mainly teach you about in the Discord. And there's another site called Velo, that's for spot flows, derivative flows, things like that. Anyway, this is XOcharts order flow platform. It gets better almost every year. I love it. It's my favorite one. All the templates that I use, you can have them. I use just general TPO chart for daily TPO chart. I use that. I also use footprint chart. One of the things as well, one of the reasons why I don't use TradingView is because I don't really use time-based candles. So, for example, on TradingView, switch back. On TradingView, these are all like 1 hour candles. Let's go to Bitcoin. Let's go to Bitcoin. Let's go on here. So these are like 30-minute candles, right? And you can change it to daily or hourly, 5 minutes, however you'd like. You could even go down to 1 second if you got the premium. I don't. I just have Pro because, again, I just don't use TradingView that often to warrant me having a premium account. Here, this chart, you'll notice these aren't, they look almost very different to what Bitcoin looks like. It's very different to what Bitcoin looks like. And the reason for that is because I don't use time-based candles. In this chart, for example, I'm using delta candles. So I'm just looking at delta, the shit that actually matters at the end of the day. That obviously VWAP's on there too. I also use delta candles to essentially I use the because when you create a delta template on XOcharts, I call it a delta template. I don't know what I'm talking about, but when I basically set amount of delta I want per candle, I can actually make a TPO from it too. And I'm not going to show you how I use this. I'm probably going to keep this one to myself forever, just because I don't want anyone to use this. Yeah, I find this platform very good for that. Okay. The other template I'll probably give you, or that you'll have access to, is essentially my mean reversion template. So again, these are not time-based candles. They are trend reversal candles, and essentially what I'm looking for is poorly positioned aggression. Okay, so for example here, right, you got a lot of buyers up here, but then this calculates how many ticks the price moved. In terms of ticks, we were moving the opposite way. Likewise, here at this VWAP, once we flipped it, same thing happened. And again, poorly positioned quite here as well into that lower standard deviation, third standard deviation band. Okay, so days where we're chopping around, I'm probably look at this a little bit more. Days where I'm looking for larger moves, I'm probably gonna look at the other template a little bit more. And although this is 10 million lot, so every 10 mil is going to print a candle, I use delta 10 million for very specific reasons. Likewise, I use a delta of 8 million for something else, and I use a delta of 30 million for something else, and I use different I look at different sizes and delta for different things. Okay. What else do we have? I got a few other things here as well. This is market sessions. So looking at, if you look at the bottom here, Tokyo, London, USA. So I'm looking at market sessions. Obviously it's the weekend, so you don't have to